We've got the management of NALCO joining in.
Well, that's right. Let's get straight to our next corporate that we have on the show. Mr. Brijendra Pratap Singh, the Chairman and Managing Director of NALCO, joins us on the show. Hi, Mr. Singh. Good morning. Good to speak to you. And thanks a lot for speaking to us exclusively on CNBC TV18. Let's get straight first to your numbers and the way ahead as well. Tell us a little bit about pricing first. Alumina prices have been weak, while aluminium prices have gone to multi-year highs. What is the outlook you are working with on pricing with regard to aluminium as well as alumina from year on? If you could give us a broad band.
For this year, financial year 27, what we are looking, alumina prices will be stressed because of the excess alumina in the market, and we are expecting somewhere around $300 to $310 will be the alumina prices for this year. Aluminium, as of now, it is around $35 to $3,600. But it will come down after the geopolitical situations improves. We are expecting somewhere around 3,100, in between 3,000 to 3,100.
Okay, 3,000 to 3,100. Got it. Quick question, Mr. Singh. As you mentioned briefly, if the geopolitical tension cools off, then alumina prices will pop up, you think? Do you see it surge?
Alumina prices will maybe slightly, but there is already excess of alumina in the market. Because you see, when the situations is normalized, what happens? The starting of the smelter will take some time. It will take 6 to 7 months. So immediately, the alumina requirement will not be there. After 7 to 8 months, the requirement will start coming. So that is the thing. So alumina, already excess of alumina in the market is there. It's not going to further increase.
Okay, all right. Let's talk then about alumina first, because your refinery is going to come on stream. If I'm not mistaken, I think the next 30-40 days, it's going to be coming on stream. 500,000 tons or thereabouts. How do you see ramping up of this capacity that's coming up? What kind of volumes are you penciling in for this year? Because earlier, I think you were far more optimistic in terms of ramping it up. Now, I think you've scaled it back. So give us the updated number.
This 1 million ton refinery, which we are now, will start the commissioning process in next month, around June onwards. Commissioning process, it is a chemical plant, process plant, already a lot of things are there. So it will take around 3 to 4 months to stabilize and maybe come to maybe 50-60% of the rated capacity. This year, earlier we had planned of around 5 lakhs. We are optimistically what we are thinking, somewhere around 2 lakh to 3 lakh we will be getting this year. And next year onwards, we'll be ramping up to the fullest capacity.
Got it. Okay, all right. So now around 2 lakh to around 3 lakh in comparison to around 5 lakh.
That is the optimistic figure which we are thinking of.
Okay. Now, most of your alumina is exported, right? Could you tell us how much of that alumina that is exported goes to the Middle East? And if you could help us out with, are you looking at longer term contracts within India itself, since the globe is in a bit of a flux and a bit of a oversupply situation on alumina?
Yeah, you see 50% of our alumina production is exported, and whatever we are exporting, last year we have sold around 14 lakh tons of alumina. Out of that, around 40% is going to the Middle East, and rest of the going to the other countries. With this expanded capacity increase in the alumina production, what we are targeting is to increase our presence in the domestic market also. Last year, we sold around 1.38 lakh tons of alumina in the domestic market. This year, we are targeting around more than 2 lakh, maybe 2.5 lakh tons of alumina to be sold in the domestic market. There is a huge demand of the alumina in the domestic market also. We have to increase our facilities for loading of alumina and supply to the domestic market.
Okay, all right. So now you're looking at, incremental supplies in the domestic market because the Middle East has gone into a bit of a flux. And you said, sir, with regard to alumina, out of the total sales, how much is exported?
Around 50 to 55% we are exporting, because we are producing around maybe at present around 2.1 million ton. Okay. Out of that 0.9 we require for our own smelter, and around 1.1 we export.
Got it. All right. So majority of your alumina sales are exported, and out of that 40% goes to the Middle East. We're getting it correct, right, yes, sir? Around 0.4, 0.5 million tons goes to the Middle East.
It's not that fixed, always it is going, because we do on a spot tender basis. On spot tender, sometimes it goes to some other countries. But on an average, maybe 40 to 45% going to Middle East.
Let's get to some input costs then. I understand, that CT pitch, you have your CP coke prices as well. They have moved up. So as a cost basket, how much have these prices moved up? You have a couple of listed players like Rain Industries, where they have been indicating that the pricing has moved up. Could you tell us CP coke and CT pitch? I mean, how much has it moved up? Point number one. And point number two, what will help you actually is your coal. out of your total requirement, your captive sources have picked up. So how much did captive contribute in the past year? And this year, how much will it contribute?
As far as the caustic soda prices, CP coke prices, and CT pitch prices are concerned, they have increased. Like caustic soda, it has gone up from 42 to 45,000 per ton. Caustic soda prices has gone by around 5,000, 4,000 to 5,000. CP coke also has gone up by around 12,000. It was 44 on an average last year. This year, whatever the latest prices are, it is somewhere around 52, 53. CT pitch has also gone around by maybe 6 to 7% CT pitch. So this all increase in prices will increase our our total cost of aluminium by maybe around 5,000 to 6,000 rupees per ton. Cost of metal will increase, and cost of alumina will increase by around 2,000 rupees per ton.
Okay.
We have advantage of our our coal production. Last year we did around 4 million ton, that is 40 lakh tons of production. In previous to that year, it was 2.8 million ton. This year we are targeting 4.8 million ton. So out of total 7.2 million ton is our requirement for our power plant. Out of that, 4.8 will be producing from here, and the rest around maybe 2.5 will be taking from our linkage source.
Okay, we have some color then on the input cost and also the benefit you'll be getting of captive coal. Now we'll focus on the EBITDA per ton, sir, because you're going to get the benefit of higher prices, but there'll be a bit of a mix in terms of input cost spike. And as I've been seeing, your employee cost as a percentage of the total mix, that has come down a little bit, which will give you some breathing space. On an EBITDA per ton basis, I'm looking at a Kotak note. For last year, you did roughly around $1,350 per ton for aluminium, EBITDA per ton, and on alumina, it was around $180 per ton. Now, they're estimating that this year you'll do around $1,850 per ton on aluminium and on alumina around $140 per ton. Is that doable, you think so? Or can it be better or worse?
If we talk on the rupees terms, in the rupees term, our EBITDA per ton is around, last year it was around 1,21,000. It will come down to maybe around $1,300. And alumina was around 21,000 per ton. Slightly it will reduce down because our interest and depreciation will be there. Our costs, especially input costs, are increasing. Totally depends on what will be the realization we are getting from the market. If the realization present which we are getting, it will remain almost same because the realization is on the higher side. But the cost, around 10% to 15% increase in the cost is there. We are expecting slightly reduction in the EBITDA as far as this financial year is concerned.
Okay, final question, sir. My colleague Vivek yesterday spoke about an OFS in Coal India, and the government could be a little bit opportunistic with aluminium prices being up as well. But their holding is already around 51.5%. Have you heard any kind of divestment plan from the government of India for the NALCO on the whole, or any kind of small OFS?
No, NALCO, as of now, there is no disinvestment plan. The shareholding pattern will remain the same.
All right. All right. Thanks a lot, Mr. Singh, for joining in and giving us all of those details. Wishing you all the best for the coming year. For the time being, the street expect a little bit more, I think, in